Hello viewers, we'll be going over GUSH and DRIP. In this video, we'll be going over my trade idea of the week and the day-by-day forecast or probability model for GUSH and DRIP. So let's start off with the technical analysis. On Friday, it closed around 4.7%. And as for GUSH, we have now approached to positive MACD. And at the moment, we're quite near to overbought RSI. And as for the 4-hour chart, if we expand that further, we bounce right off the 200 moving average, this green line right here, and we see slight signs of the 4-hour MACD converging. If we expand that further onto the daily chart, what we have here is the moving averages are a bit distorted due to GUSH being a leverage ETF. We have now seen approach to positive MACD. So let's zoom in for the 4-hour chart. What we have here, and let's examine the trade idea of the week. So my position size for GUSH will be less than 1% of my portfolio, and my entry will be $34.87, and my sell target will be $39.90. That is where we encountered resistance that dated back to August 11th, and my stop loss will be $33.74, so around this range right here, and this is the range where I'll make up my entry for GUSH. So for the day-by-day probability model, I wouldn't take too much consideration for this model. So when we examine DRIP, so as we progress to the 5th day, we have a 40% chance for it to climb between 0 to 38%, and to the upside extreme case, a 20% chance for it to climb between 75% to 114%. And to the downside, we have a 40% chance for it to fall between 0 to negative 38%. So again, I wouldn't take these probability models into much consideration due to it being highly distorted because it's a leverage ETF. And so now let's examine DRIP. On Friday, DRIP closed down 5% on Friday. And as for the 1-hour chart, we have approached to negative MACD. And if we zoom out to the 4-hour chart, what we have here is we see it converge back in August 12th, and we are starting to see another divergence, still in negative MACD, and we're still near oversold RSI. If we extend that further onto the daily chart, what we have here is we encounter a previous resistance level. The 50-day moving average continues to act as our resistance. That dated back all the way to July 10th and as well as July 30th. So we are continuing to make lower highs and lower lows. So we may continue to see another instance where we approach this level. So if we examine the trade idea of the week, my entry for DRIP will be around a price of $3.92. That is around this range right here. And for my sell target, that will be $4.62. That is fairly close to where we encountered previous support levels. And since we're below support, that now acts as a resistance. So that dated back to August 5th, that previous support level. And as for my stop loss, that will be around $3.66. So around this range right here, where we encountered back in June 9th of where we had previous support levels. So let's examine the day-by-day probability model for DRIP. And as we progress to the fifth day or a week of trading, we have a 50% chance for it to climb between 0 to 9%. And to the downside, we have a 25% chance for it to fall between 0 to negative 9%. And on the extreme case, a 25% chance for it to fall between negative 9% to negative 18%. DRIP is an inverse of GUSH, so I do consider this probability model more reliable than compared to GUSH. So do take that in consideration. And these models are available in the link below, so do check it out. If you enjoy this content, feel free to like, comment, subscribe, and thank you for watching.